Coming up on today's show, Morocco begins wait-and-see approach as first major interest rate cuts takes effect. And Zimbabwe's inflation rises to 785.55% year-on-year in May. Plus, Nigeria may be spending as much as 18% of GDP by 2030 to achieve progress in the SDG, and that's according to the IMF. Well, thank you for joining us on the program. I am Bisi Adebayo. We begin from major markets here in Africa where we track, and they're looking bright at intraday as most indices were in the green, except in South Africa where the JSE is closed to mark the Youth Day holiday, but was down a whopping 2.25% on Monday. And here in Nigeria, the all-share index gained 0.21% as at intraday, and the EGX 30 in Egypt was also 2.66% positive at intraday. And the markets in the Middle East eased off previous day's losses, with intraday numbers turning positive as well, starting from Abu Dhabi with a 1.43% gain and Dubai with an increase of 0.89%. The Qatar index was also 0.29% positive, while the Saudi index gained 1.23% as at intraday. Well, the markets are also looking good in Europe as at intraday as investors react to the U.S. Federal Reserve's latest announcement and focus on central bank action around the world. Orich Bath is standing by at the Frankfurt Stock Exchange to tell us more about this. Good afternoon, Orich. Well, the markets are up in Europe today, and that's fueled by news spilling over from the U.S. late yesterday. What are traders actually happy about, and what are the markets, or how are the markets doing?
Well, one aspect is a large infrastructure spending program that apparently U.S. President Donald Trump is thinking about. Reports are that it will top more than $1 trillion. No confirmation yet, but that whets the appetite of investors here, and that would be further money into the economy, and that always seems to fuel investor interest. And you just mentioned the bond buying by the Federal Reserve. It's about corporate bond buying, and now the Fed will not just buy ETFs, exchange-traded funds, sort of mirroring, exactly shadowing that market, but in a specific way buying individual corporate bonds, and that is likely to inject a lot of money into the corporate sector, and that really fueled Wall Street. That sent stocks in Asia up tremendously, and that's also really propelling up the level here in Europe. If you look at the DAX right now, it's about 3.5% on the positive side. Even better in Milan, it's 4%, and the FTSE in London and the CAC 40 in Paris, they're close to 3%. On the Forex side, it's not quite the same spectacular development. Really little unchanged when you look at the euro dollar. The euro is down slightly, and the sterling to the dollar is up slightly.
German airline operator Lufthansa says it was seeking to strike agreements with worker representatives by June the 22nd, and that will be on how to make cuts equivalent to 22,000 full-time positions. Well, the airline has specified where it will cut jobs across the wide-ranging group. Now, give us details of that.
Yeah, it's a wide-ranging group, and it's clear now that half of those job cuts are targeted for Germany, and half of them are targeted for outside of Germany. Lufthansa has, for example, Swiss or Brussels Air, or AUA, the Austrian airline, operating out of Vienna. And alone, the flight operations are going to contribute 5,000 jobs to be cut, 600 among pilots, 2,600 among flight attendants, and 1,500 among ground crew, but also catering, also staff at headquarters, staff at other administrative units, and also the technology, the engineering side, which is also considered a core activity at Lufthansa, is to be losing a lot of jobs. The share, one of the highest gainers today in the DAX.
Now, how are the markets in Europe digesting the news coming from the UK? And that's talking about the new unemployment numbers, which have been badly hit by the virus. And we see that the economy has taken a beating as well. Tell us how the markets in Europe are reacting to these numbers.
Yeah, they're basically skimming over them and saying, well, it's almost par for the course when you consider what a beating the UK has taken and add Brexit to the equation. But one expert says the unemployment development in the month of May is the worst, is the fastest climb in unemployment since the Great Depression in the 1930s, and he added that the unemployment crisis, that was just a beginning. The claims for job-related benefits went up by 23% in the month of May to 2.8 million people, and the people on the payroll went down as well. And an expert estimates that there will be 3 million people ahead that will be unemployed in the United Kingdom.
Thanks again, Orich. We'll see you tomorrow. Well, we're still talking about the latest labour data coming from the UK, and Juliana Olayinka is ready to tell us more about how the markets are performing at intraday, of course, reacting to this data. Good afternoon, Juliana. Earlier on, you spoke to Chimi about the latest labour data showing the number of workers on UK payrolls dived more than 600,000 between March and May. How are the markets reacting to this grim data?
Good afternoon, Bissy. Well, it was a huge talking point this morning. It seems to have tapered off at intraday. In fact, we've seen a big jump on the FTSE. At one point, the all share was up by about 2.5%. There are some investors that believe at the moment shares are being way overly valued, but I believe that sentiment is coming from stimulus packages being delivered out by the Bank of Japan and also the US Federal Reserve in America. Of course, there are still people that are chewing the figures from the latest statistics from the Office for National Statistics about the labour market. And yes, the decrease in the amount of people on the payroll is the biggest figure that everybody's looking at. That's over 600,000 people that have dropped off the payroll in the past 1 month. And really, I think now people are bracing themselves for those figures to get worse. So at the moment, it isn't as bad as is expected, and that's because of the government furlough scheme. So at the moment, the government are really paying people's wages, but as soon as that tapers off in the autumn, we are set to see mass redundancies, as we already have seen. Just this morning, I was speaking about Jaguar Land Rover. They're going to be letting thousands go. We've already seen thousands going in the airline industry, and that's even with the subsidy pay. So there are fears that this could get much worse very soon. But to have a look at those numbers then, the FTSE all share at intraday is up by more than 2.5%. The FTSE 100 is up by 2.46%, and the FTSE 250 is up by almost 3%. In currencies, the pound is up on the US dollar by 0.28%, up on the euro by 0.36%, and also up on the Japanese yen at 0.25%.
Now, Juliana, there's still the issue of Brexit, and PM Boris Johnson says there is no reason why the Brexit deal cannot be sealed by the end of July, after he asked the EU lenders at the video summit to put a tiger in the tank of stalled talks. But then the president of the EU Council, Charles Michel, tweeted afterwards that the EU would not agree to a pig in the poke and never accept an agreement that went against the interests of the union. Tell us what exactly is going on between them.
Well, it's back and forth, tit for tat, which we've seen throughout the years between different prime ministers, because there have been 3 now in Britain that are trying to resolve this issue, and certain members within the EU. And one of the main issues is there have been 4 rounds of talks and negotiations, but nothing seems to have gone very far. One of the main reasons people are given to this is the fact that this has taken place over video conference call, and over the past 3.5 years, negotiations from both sides have been very used to speaking with each other, especially in Brussels, very, very late at night. Historically, they're known for doing negotiations after midnight. They haven't been able to do that. Yesterday, Prime Minister Boris Johnson had an hour-long video phone call with the European Commission President Ursula von der Leyen and others who were very keen and notable in the negotiations. And he came off that call pretty buoyant. He said that he does believe a negotiation could take place around the end of July, which would mean that Britain doesn't crash out of the EU at the end of the year without a deal, which is very much a possibility because there are so many areas of contention between the two sides, mainly in Britain. They're not happy with the fact that the EU do not want to move about fishing. The EU want to be able to go into British waters and fish as they have been doing so over the past couple of years. But Brexit voters are really strongly against that, which is why David Frost, the chief negotiator, is not backing down. So there are several areas. Boris Johnson hopes that a negotiation can be achieved, a positive negotiation by the end of July. Michel Barnier, the chief negotiator for the EU, wants it to be done by October. So there are more deadlines. But what we're going to see over the next couple of weeks is intensified negotiations. So rather than them taking place once a month, they will now be taking place every single week. And perhaps people will be starting to fly to Brussels or indeed to London.
We sure have our eyes on that. Now, Deliveroo and the bosses of major chains, including Pizza Hut, have written a letter to PM Johnson. They are asking for support to prevent mass closures as physical distancing rules threaten the future of the restaurant industry. What measures are they calling for? What would they like to see in place?
Well, this is a major talking point in Britain at the moment, that 2 metre social distancing measure, which nobody knows if that's the exact science. In several other countries, they have different amounts of length that they believe people should stay away from each other. But what we're expecting is that the hospitality industry will open on July the 4th. And many of them, particularly big business lobby groups and even some backbench MPs, have said to the Prime Minister that it will be completely unsustainable. Some restaurants will not be able to open because they just cannot function like that. And London, in particular, is pretty dense, and not many restaurants have the luxury of outdoor space. So now Deliveroo, who represent about 100 restaurants, along with their 90 partners, they've written an open letter to Boris Johnson, basically saying that they need more intervention from the government. They want the furlough scheme to continue even when some of these restaurants open up, and they also want a cut on VAT for restaurant food to allow and encourage more customers to come into the store. So it's a major talking point at the moment. Boris Johnson is going to be announcing an update on that because he does have a committee looking into whether or not this 2 metre can be reduced. But we have had warnings by the World Health Organization saying that Britain need to be extremely cautious because we were one of the most affected locations on earth. And if we're quick to start saying that people should be huddling together again, we could in fact see a second wave, as we're seeing in certain parts of Asia.
In all of this, Juliana, all I would say is please continue to stay safe.
Thank you, Bissy. Thank you.
Nigeria spent approximately $1 billion on food imports in the first quarter of 2020. Now, in the last 3 years, the more popular mechanism for facilitating international payments in Nigeria has been through the use of letters of credit. But recently, commercial banks are believed to be discouraging customers from establishing new confirmed letters of credit as part of a forex rationing strategy. A research analyst at the financial derivatives company Nosike Nwajide joins us now to analyze the impact of this on the domestic commodities market. Good afternoon, Nosike. Thanks for joining us on the program. Tell us what all of this would actually mean for the commodities that have high import content and imported finished commodities.
Well, obviously, if customers can't open confirmed letters of credit, they'll seek other means by which they can obtain, the forex to import these products. And the alternative is to go to the parallel market. Obviously, the parallel market is, as at today or yesterday, was about 455 naira per dollar. So you have more expensive imports in the coming months. Higher prices for imports, higher prices for raw materials, and there's also the issue of the inventory cycles. Before the lockdown, before there was a global lockdown, let's assume that inventory cycles are 3 months. If the last imports came in March and the inventory cycle is about 3 months, we expect the next batch of imports to be coming right about now, June and early July. So, I mean, some countries are yet to completely open. So we might have some of these importers not being able to import the goods and the commodities that they would ordinarily import. That may lead to unavailability, which would lead to scarcity. So on one hand, you have higher prices, then you have the problem of unavailability, which itself will lead to even higher prices. So those are the things we expect to be confronted with in the coming weeks and months.
But Nosike, food inflation has also risen to 15.03%. So what would be the impact of an embargo on letters of credit on food prices and on the cross-elasticity of demand on domestically produced commodities?
Obviously, the first impact would be the rise in food prices. The food basket, food inflation accounts for 51% of items in the inflation basket. So obviously, there will be a rise in food prices, leading to a rise in food inflation. Then we'll now see have an impact on the headline inflation. That should rise above 13% in the coming months. Then the next, more importantly, is the impact on the consumption pattern, because we're in the middle of a recession. Pockets have been affected. Consumption patterns will be altered. If prices are higher, people will shift to alternatives, cheaper alternatives. And then again, if you move to a cheaper alternative or cheaper substitute, so to speak, you demand less of whatever good complemented the goods you were previously consuming. So we'll see basically a shift in consumption patterns where higher food prices will cause consumers to shift to domestic substitutes, and these domestic substitutes will spur increased domestic production. So it's not necessarily a bad thing. The change in consumption pattern will affect domestic production, which is a good thing for Nigerians and Nigerian production.
But in spite of all of this, one would wonder if the forex rationing strategy can be sustained and how it will affect the parallel markets where the naira is now trading at 455 to the dollar.
The short answer is no, it's not sustainable. It's a short-term measure. The options before the CBN are rather limited at this time. There's a decline in forex receipts. The other options are to let the reserves bleed. Reserves are falling. From July last year to about April, before we started seeing an accretion, reserves had fallen 25%. The CBN is trying to manage reserves by controlling demand at this point. That's what the whole forex rationing thing is about. So an exchange rate adjustment is another option, but it's not the option the CBN is likely to take. So the CBN, ordinarily in the past, we hear that the CBN would protect the naira at all costs and would bleed reserves. But now we're seeing the CBN saying that, okay, look, we need to manage reserves and let's shift demand to the parallel market. So in the coming weeks, we might see increased demand in the coming markets and heightened pressure in that market. We might see the parallel market depreciate to 460. And as global trade resumes, there's expected to be more pressure in that market. And as far as the forex rationing measure being sustainable, the IMF has even warned Nigeria that it's something that will hamper trade and investor confidence, and it's something that as we look to go through the economic recovery, it's something we need to do away with as the health crisis fades away, and we need to confront the economic challenge head on.
Research analyst at the FDC, Nosike Nwajide, thanks for speaking with us on the program.
Always my pleasure.
Morocco's central bank has started what one can describe as a waiting game with the first interest rate cut in a bid to ease its economic pains. The approach adopted by the North African kingdom is in response to the reduction in key rate in March below 2% on Tuesday. Morocco is gradually reopening its economy after a 3-month lockdown, but the country is facing its weakest economic growth in a generation as the APEC Bank plans another stimulus package for local businesses. The sweeping lockdown enacted in March reduced activity in the tourism and agriculture-dependent economy, while manufacturing and some other businesses have been allowed to resume activity, and movement restrictions remain in place in major cities, including Casablanca, Rabat, and Tangier. The latest data from Zimbabwe's National Statistics Agency shows that the country's inflation has risen to 785.55% year-on-year in May, from 765.57% in April. On a month-on-month basis, inflation slowed to 15.13% from 17.64% as citizens see a gradual reduction in rising prices of basic foods. The country's currency has shown weakness. And the central bank forecasts the annual inflation rate to fall to 50% by the end of the year. But analysts say price pressures will remain elevated due to a weak exchange rate and shortages of food following a drought. Zimbabwe is also dealing with the impact of coronavirus on its economy, which was already experiencing its worst crisis in decades, marked by food shortages, medicines, and foreign currency. Nigeria needs an additional spending of 18% of GDP by 2030 to achieve progress in the Sustainable Development Goals, and that's a level higher than the average low-income and developing countries. And that's coming from the latest report by the International Monetary Fund for May 2020. The report shows that unlike other low-income and developing countries, additional spending is higher in education and water and sanitation and lower in health, electricity, and roads. The IMF notes that Nigeria faces serious development gaps, with population projected to grow by 30%, about 60 million people between now and 2030. And that's where we wrap up today's program. Thank you for watching. I am Bisi Adebayo.